Market structure is the backbone of trading. Think about it like this. If an eye doctor doesn't understand the anatomy of the eye, can he operate successfully? Of course not. In the same way, this Forex market also has a structure. And if you don't understand the structure, you cannot trade with confidence. Structure is the base. First comes structure. Then comes strategy. And only then comes risk management. So remember, structure first, everything else later. Now, why is this so important? Because structure tells us the direction of the market. If you know the structure, you know the path. If you don't know it, you are trading blind. Yes, candle patterns may help you. Yes, indicators may give you some signals. But without understanding structure, all of this is incomplete. You may get lucky once or twice, but consistent profits remain out of reach. So let's begin. At the most basic level, there are three states of the market. Number 1, bullish. Number 2, range or sideways. And number 3, bearish. But of course, the big questions always come. Which one is the confirmed high, and which one is the confirmed low? Which retracement is valid, and which one is just noise? How do we identify a deep pullback? Should we consider a wick break, or a body break, when calling choch or BOS? The truth is, market structure is not simple as it looks at first glance. But don't worry, in this video we'll go step by step from beginner level to advanced, until you can read structure with confidence. So, let's begin. Before we start marking the structure, let's get one thing clear. Everything begins with a fill candlestick. Each candle has two main parts, the body and the wicks. The top of the wick marks the highest price the market reached during that time. The bottom of the wick marks the lowest price. Let's first understand the rules. Here at first, let's have a bullish example, where the market is moving in an upward direction. While going upward, the market pulled back with 3 red candles. This pullback is called a retracement. Then, the market continued, moving upward again. Now, let's focus on this first bullish wave. This candle here is the last bullish candle before the retracement. Mark its highest and lowest points, the top and bottom of the wick. Now, notice the next 3 candles. This forms a valid retracement. Why? Because, for a retracement to be valid, at least one bearish candle body must close below the lowest wick of the last green candle. Then, as the market continues upward again, it breaks this high, meaning one or more bullish candles have closed above it. As soon as this high is broken, by a bullish body close, this previous low becomes confirmed. Let's dive deeper into this, because understanding a valid retracement is very important for structure understanding. Here you see, in this wave, this is the last bullish candle before these 3 red candles. Now watch carefully. These 3 red candles, or the bearish candles, are staying inside the high and low of this bullish candle. Let's mark the high and the low of this green candle. You see here, the red candles are inside it. They haven't broken the low. So this is not considered a valid retracement. Never mark this at a structure level. Now, look at another example. Let's mark the high and low of the last bullish candle again. In this scenario, the red candle has taken liquidity of this green candle, but not broken the low with its body. No red candle's body has closed below the green candle. So, still, it is just a noise. This is also not a valid retracement. Remember this rule very clearly. In a bullish wave, a valid retracement will only be confirmed when bearish candle closes its body below the last bullish green candle. This is the minimum criteria. At least one green candle's low must be broken by the body of at least one red candle. If there are more candles involved, then the retracement becomes even stronger. Like here, you see more than one green candles are broken by more than one red candles. Mark this rule in your mind, because it defines the true rhythm of the market structure. Now at first, in the bullish market, let's look into different examples. Mark the structure levels. When the market is moving in an upward direction, meaning in the bullish direction, the market keeps creating new highs. So we use the terms high, higher high, and higher low. As we discussed earlier, these points are only marked when there is a valid retracement. After a valid retracement, those structure points, like high, higher high, and higher low, become confirmed. In this wave, after this bearish valid retracement, this point is marked as a high. Afterwards, when the market breaks this confirmed high, then the lower point becomes confirmed, and we mark it as a higher low, because it is lower than this high. Now once this high is broken by the bullish candle body, and the market makes a valid retracement, then this point becomes a higher high. Why higher high? Because it is higher than the first high in this bullish wave. Next, here, you can see some red candles. but these do not fit our valid retracement rule. So, this is just noise. This whole section will be considered one single wave. There is no structure marking in this area. This is a high, but unconfirmed. We don't know yet whether the market will retrace from here or continue upward without any retracement. Now, before we start studying the bearish market, let's look at more bullish examples so that in every market condition, you become confident and master it. Pause the video now and try to mark the structure on this chart. This chart has a lot of noise with many wicks. So, let's clarify step by step. If this is the starting point of the wave, then this is called a low. Here you see a green momentum candle. But there is no valid retracement. All we have is liquidity sweep with wicks. So do not mark structure from this area. Next, here again, the market has taken liquidity from the top, and the next candle closed inside this big green candle. So, no candle body closed below the green low. Therefore, no valid retracement here either. Now, let's move on. Look here, from this high. This part is very important to note. This is the last green candle. Now watch the next red candle. This red candle is bigger than the green candle, including its wick. This red candle has taken the green candle's liquidity. Important point, because the red candle's wick went below the last green candle. The effective low of that green candle is shifted down all the way to the lowest wick. If the next red candle has an even lower wick, then the low shifts further downwards. So remember the rule. For a valid retracement, a red candle body must close below all those wicks. The body close must be below that shifted low. Finally, the market retraced up to this point, and that high becomes confirmed. But this low will only be confirmed once the market breaks that confirmed high. Here we see something different. After breaking this higher low, the market started to range sideways movement. It did not immediately rake the confirmed high. Only when the market later broke that confirmed high, with a candle body close, then this higher low became confirmed higher low. Do you know why? Because if the market makes a low, then move up a bit, but does not rake the confirmed high, and instead sweeps and move down again, then that point is not a higher low. So remember clearly, a higher low is called confirmed only after the market breaks the high with a candle body close. Also remember, all movement between this high and this higher low is internal movement. This is sometimes called internal structure. And we will study internal structure in detail later. Here you see from the top, market made a valid retracement. So this higher high is confirmed. But the low point is not yet confirmed as a higher low. Why? Because the next move of the market is still between these 2 points, this high and this low. So what could be the next possible movement? If the market breaks this high, then this low will be confirmed as a higher low. But if the market fails to break this high and instead moves downward, then it can create a new low. That's all for the bullish structure. We have learned how highs, and higher lows are confirmed. In the next video, we will move into the bearish market structure. We will explore lows, lower lows, and how momentum shifts through break of structure and change of character. And in the final part of this series, you will get a chance to submit your structure marking assignment, and we will review it for free. Subscribe to our channel for upcoming videos.